All right, good day, everyone. My name is Peculiar Shadow, and I am a digital and business analyst at Fitted City. I am your moderator for today's session, and I am so pleased to have everyone here. Also, for today's session, we are going to focus on housing finance, and I have the pleasure of introducing our speaker who will provide more insights on that. So let's give a round of applause for our speaker, Mr. Omishakin Anu Oluwa.
Thank you so much, Ms. Pecolia. Thank you so much. Good day, everyone. My name is Anu Mishaki, and I'm your speaker for today. Now, I would like to go into the topic straight up. I don't want to waste our time, and thank you so much for joining us today. Thank you so much. Now, the topic before us is understanding housing finance and different ways to raise money for housing projects. Now, before I move on, I would like to talk about the two keywords that are there. And what are the two keywords that are there? We're talking about housing and we're talking about finance. Now, what is housing? Basically, housing is where people sleep. And as human being, we have three key factors in life, or should I say three needs, and that's food, clothing, and what? And shelter. Now, the shelter part of there is what? Is housing. And finance, as we all know, is management of money. And if you're talking about management of money, we're talking about management of money in terms of investing, borrowing, lending, budgeting, saving, fund forecasting, and so on and so forth. So now, if we're talking about housing finance, it's basically saying, how do we get money to fund housing projects? Now, this presentation isn't just tutored towards individuals, towards project developers alone. I tutored it towards individuals who are looking for funds to own a property. I tutored it towards investors, property developers who need funds to fund their project, who need money to fund their project. Now, as we know that Nigeria is currently having a substantial housing deficit of between 20 to 28 million units. And this challenge is caused basically because of rapid urbanization. Because there is now rapid urbanization in the country, there is now need for what? For more housing. We have 20 to 28 million units, shortage units for housing in Nigeria. So now, how can we solve this problem? We need money. We need money. And now that's why we're coming up with this topic, housing finance. How do we get money? How do you get money as an individual to finance your housing, your house? And how do you get money as an investor or as a property developer to get to finance your business project? Now, housing finance basically intricate method and system designed to provide monetary support for the acquisition, construction, and renovation of residential properties. So how do we get money to fund projects? Now, the main purpose of housing finance is making home ownership accessible to everyone, and we need a robust house finance sector that facilitates home purchases, which in turn stimulates demand for new homes and construction. Now, if you're talking about the different housing finance models that we have traditional housing finance model, and that's basically government-backed institutions, banks, and so on and so forth. Now, how does housing play a role in economic development and social welfare in Nigeria? Basically, the primary objective of housing as housing finance, as we all know, is to facilitate home purchase and improvement. Not just home purchase, we're talking about also innovations. Like you have a property and you want to innovate it. How do you get funds? And also to enable access for those without upfront capital. Yes. How do we make individuals without capital or without money to get properties in terms of housing finance. How do we do that for people? And now the third one is enhance quality of life. Yes, shelter is actually one of the basic necessities of life. Where will I sleep? After the everyday hustle, after the everyday bubbling and bustling, at the end of the day, we need a place to lay our head. So now housing is very, very essential. It's very, very essential. Now, due to this shortage, there is need for there to be a huge financing in terms of housing, not just in Nigeria, even in Africa and all over the world. Now, the economic impact of housing finance is number one, contribution to gross domestic product, and that's the contributions to the GDP of the country. Now, if you're talking about the GDP of the country, you're talking about the gross domestic product, and the gross domestic product is basically the total production done in the country. And number two is job creation. Yes, if you get finance for housing projects, there will the housing would create what? Job opportunities. There will be employment opportunities, not just for skilled workers, but also for what? Unskilled workers. And number three is demand for materials. Yes, housing finance, economic impact would lead to what? Demand for materials. Because when you want to build your property, you will need to get materials, you need to buy a whole lot of things to make it come into reality. The social welfare impact. Now, how does housing finance affect the social welfare? Number one, private social insurance. Now, it helps what? It helps what? Wealth creation. Now, access to funds for essential needs. Yes, housing gives access to what? Lots of funds for essential needs. Now, if we're talking about essential needs, we're talking about healthcare, talking about needs for education, and so on. Improved living standard. Improved living standard. When you have a home, when you have a place where you can lay your head, it improves the living standard of an individual. Now, there is difference between cost of living and standard of living. When there is an increase in the cost of living, there will be a decrease in the standard of living. And when there is a decrease in the cost of living, there will be an increase in the standard of living. Now, when there is access to finance for housing projects, access to finance to get housing, it would improve not just the life of an individual, but also the standard of living of an individual. Now, what are the different funding avenues? What are the financial models that we can actually make use of for housing finance? We have the traditional housing finance mechanism. This primarily involves government-backed initiatives and the operations of commercial banks and mortgage institutions. Number one, let's go to the government-backed initiatives. What are the government-backed initiatives that we have in Nigeria that can be used to fund house, to get money that can be used to get raise money for housing projects? Number one is what? The National Housing Fund. The National Housing Fund was established by the Third Act in 1992. Its primary aim is to mobilize funds for the provision of affordable residential houses in Nigeria. The provision of what? Affordable residential houses in Nigeria. Houses in Nigeria, should I say, it's not that affordable. Affordability is subjective to an individual's pocket. Now, we have different funding sources. And number one, as I was explaining, is what? National Housing Fund. So what are the benefits of the National Housing Fund? Number one is you can apply for housing loan from the National Housing Fund. And number two is you can borrow up to 90% of the cost of the house. And all you just need to do is just to foot the remaining 10%. Number three is what? The interest is low. And what's the interest for the National Housing Fund? It's just 6%. So now, what is the eligibility and the loan application process? How do you basically get this loan as a Nigerian? Now, all Nigerian in employment, meaning if you are a Nigerian and you're employed, whether self-employed or paid employment, you are required to contribute 2.5% of your basic salary or income to the fund. 2.5% of your basic salary or income to the fund. And to be eligible for a loan, a contributor must have made at least 6 months of contributions. You You must have made at least six months of contributions, and applications are submitted through registered and duly accredited primary mortgage banks. And then they'll package it and they'll forward it to FMBN. So now let's move to the second one, the Federal Mortgage Bank of Nigeria. This is actually another bank where you can get funds. You can get fund for housing. And FMBN plays a central role in implementing government housing policies. They provide financial support for affordable housing projects. And the core functions of the Federal Mortgage Bank is they provide mortgage loans and financial support to individuals and developers, as well as implementing government policies related to housing finance and development. In terms of administration, that's the Tinubu and the Shettima administration, FMBN has shown significant improvements. Between May 2023 and April 2025, the bank home, they've disbursed 73 billion naira in housing finance. 73 billion naira in housing finance, resulting in they delivered 2,542 new homes and benefited 30,000 Nigerians. The NSS share is specifically designed to support the Renewed Hope social housing program. And this program actually targets low-income earners, the unemployed, the internally displaced person, and so on and so forth. A significant portion of this program involves the construction of 100 housing units in each Nigeria's 774 local governments. Another traditional housing funds is Family Homes Funds Limited. Now, let's move to commercial banks. Commercial banks and mortgage institutions. Commercial banks are basically banks. We have different tiers of bank. We have tier 1, tier 2, tier 3. So commercial banks are also part of the institutions that people can actually go to get money for their housing project. Now, commercial banks and mortgage institutions, they're very important in helping people and businesses get loans to buy or improve their property. Now, what are the types of loans that commercial banks offer? What are the types of loans they offer? Number one, they offer home purchase loans. These are loans you get to buy a house and then you pay back the money over time. They actually spread the loans to 15 to 30 years. That's in terms of loan repayment. And another loan they offer is what the home improvement loans. Now you can have a property and you want to improve the property, you want to renovate the property, you want to give the property a new look. You can go to the bank, commercial banks, to get loan to fix and do what and upgrade your home. And the next type of loan they give out is the equity release programs. This will help you to use the value of your home to get money. You use the value of your home to get money from banks, and it's actually named what collateral. You go to the bank, you need money for a particular project, and you have a property worth 1 billion. You go to the bank, they're going to give you any amount you want. They can give you 2 billion, they can give you 1 billion. And they give out construction and development loans. These are for building homes, big property projects, including buying land and covering construction costs. Now, the bank, when they give out these loans, there are interest rates, and the interest rates range from 6% to 25% per year. And the loan duration is typically between 5 to 20 years, which for repayment. If you want to repay the loan, it's between what, 5 to 20 years. And let's move to non-financial institutions, non-bank financial institutions in housing finance. Number one is pension funds. Pension funds. Let's go to the next one, which is the Real Estate Investment Trust. This is another financing process that you can actually go through to get fund for your property. Now, the Real Estate Investment Trust, these are companies that collect money from people to invest in real estate. This is another means for what? For investment. And some of the challenges of this investment is many Nigerians do not know about this. They don't know about REITs because only equity REITs are active. This means that they actually own and rent out buildings to earn money. Now, the next one is private equity firms. Private equity firms are investment companies that raise large amounts of money from wealthy individuals and big institutions. Yes, these are firms that get money from wealthy individuals, and then they do what? They invest the money. In Nigeria, we have a firm like that, and that's Yatsa Capital Partners. Yes, they raised 31 billion naira and used it to buy and rent out a big building in Lagos. Now, how do you raise funds? These companies raise funds through insurance company, through sovereign wealth funds, through diverse means, grants, loans, and so on and so forth. Now, let's move to international funding and development support for housing in Nigeria. International funding. Number one is foreign direct investment. Foreign direct investment is when a company or person from another country puts money into Nigeria, usually by opening businesses or buying into an existing one, and takes part in running it. Now, you can get a foreign direct investment. Let's example is AFDB, African Bank Development. These are foreign direct investment companies that you can go to. You would file your paperwork, you would do the necessary documentation needed, and then they give you money for your housing project. Now in Nigeria, foreigners are allowed to own businesses here and invest in any sector, including real estate. And some of the problems with this is the economy is unstable. Prices keep rising and falling. There is inflation. So when you get funds, let's say you get funds from an investor, and then you want to pay back, let's say there are different ways to actually finance. Yes, I think I need to go into that. There are different ways to actually finance. There is debt financing and there is equity financing. Debt financing is basically, in debt financing, you own the property in total. Like you own the project in total, but you have to pay back the money over time. You have to pay back the debt. But in terms of equity financing means you go to an investor, the investor invests money into your business, into your project, your housing project. Okay, for example, you need 5 million to actually build a property. Now, when you go to an investor, the investor gives you 2.5 million. When the investor gives you 2.5 million, it means the investor owns half of the stake of the business. So whichever way you go about the project, if you sell the project or you sell the property for 15 million, the investor has a share of what 25 million. You share the profit what equally. In terms of equity financing, you do not have total ownership of the project, but in debt financing, you have total ownership of the project. Now, let's move to another financing means. The next one is development banks and institutions. Partnering with the government. You partner with the government to actualize a housing project. So how does it work in Nigeria? What does the government does when you partner with the government in terms of actualizing a housing project? Number one, they give land for building houses. They give land for building houses. And number two, they help process the approval and building permits quickly. They set rules to make sure homes are safe and are up to standard. And they build roads, electricity, and water supply to the site, and so on. And as a private investor, what do? You design and build the house. You manage the construction from start to finish. You work with banks to provide housing loans for the project. And the next one is you sell or rent out the finished house, you maintain the house, and so on. And why is PPP useful for housing? Why do we need PPP? Why do we need private institutions and public institutions to come together for housing? Number one, Nigeria has a huge housing shortage. Like I've said earlier, 20 to 28 million. So now, partnership between the private and the public would help to provide affordable housing to people. And some of the challenges of PPP, actually, government processes are often slow and they are complicated. The rules and policies can change without warning. Now, what are the innovative ways to finance housing in Nigeria? What are some of the innovative ways that people have come up with to tackle the housing deficits that we have in Nigeria. Number one is shared equity models. This is like co-owning a house with an investor. Now, instead of buying a whole house yourself, you pay a part of it. An investor or a government pays for the rest. And later on, when you sell the house, both of you share the money based on your shares. Okay, let's say you have a project that you actually want to do, and then you approach private investors or the government to be a partner in that kind of project. Let's say the project cost is 50 million. You can approach investors and they would invest, let's say 40 million or 25 million or whatever amount in the business. So now after you finish this project and you're trying to sell off the project, you are going to share the profit with the investor based on the agreed terms. The next one is microfinance and community land trusts. They give small and flexible loans to people who don't earn much or don't have steady incomes. And these models is actually used to help individuals who do not have enough money to actually build the project. Now, when they give these loans, they spread it for 15 to 20 years, like I've stated earlier, in terms of what? In terms of repayment. We have green housing finance. These are environmentally friendly homes. And number one is the green mortgage scheme. The green mortgage scheme is a collaboration between the government and Germany. The government and the government of Germany, the government of Nigeria and the government of Germany are actually working to help people get loans to build eco-friendly homes. These homes use less electricity, saving you money over time. Now, I want to move into private private individuals. I want to move into developers. Now, how can developers get money to finance projects? How can developers get money to finance projects? Number one is you need to know the total cost and the catch gap. You need to know the total cost and the catch gap. And for that, you need to know the full cost of your project in terms of land, building, legal, and so on. How much are you going to borrow from banks or lenders? When you know the cost of your project, and I know we have developers in-house, we have private individuals that would like to know how they can go about it. That's what I'm trying to explain this. So now, in terms of going about this, how can you get the fund? Now you know that okay, my project is going to cost 100 million. Who are the people? Who are the people I'm going to borrow from? Just like I've stated earlier, we have traditional finance, that's the banks, we have NHF, we have different finance. Now we also have investors. Now, who are the people who want to get these funds from? Number one, we have banks, we have lenders, and so on. Now, what's the catch gap? How much do you have? Let's say to actualize the project is actually 100 million, and you have 50 million. You would need 50 million from either investors, the government, from different finance institutions. And number two is you need to you need to know the kind of loan you will get based on the project. You need to know the kind of loan you get based on the project. Now, if you go to the banks give loans between 6 to 25%. But there are also financial institutions that give loans between 1% to 5%. So you need to identify the kind of financial institution you will be getting the loan from. Now, what are the you can also get loans from venture capitalists, private equity firms, crowdfunding, joint ventures, family houses, government grants, self-funding, and so on and so forth, and so on and so forth. So now, after you have the plan of the amount you want to use for the project, the cash gap, the people you want to meet the investors, the banks you want to meet to get this loans, you will need to actually come up with a pitch. Like, how do you want to explain to investors to convince them to invest in your project? Number one is you need to make a very important first impression. In making a very important first impression, the first thing you need to do is what kind of housing project is it? That's what you need to define. You need to define that. What kind of housing project is it? Is it commercial? Is it residential? Is your housing project going to be affordable? Is it going to be green? And where will it be located? How much money do you need? And what's the need for investors? Because if you want to go and meet an investor to invest in your business, they would actually be in need for you. You would need to present your case in such a way that there is a return on investment for them. There are institutions that give out loans without return on investment, but most investors will give out loans with return on investment. There has to be something in it for investors. Now you need to meet the team. Investors actually care about those that are behind the project. Yes, who are the key people on your team? What experience do you have in building houses, in managing money, and have you done similar projects before? You need to go along with that. And the next one is why this project makes sense? What sort of investment opportunity is this project? Why are you going into this project? Why does it make sense? Now, as an individual that wants to actually build a project, what distinguishes you, or what are the competitive edge you're going to have over your competitors? You need to do your competitors analysis. And thank you very much for listening to me. Thank you.
All right. Thank you so much. Thank you so much, Mr. Aloluwapo. We really appreciate that.